If you're a regular listener to the Smart Property Investment Show, then odds are you're already a property fanatic who loves hearing stories on investing from real people. The good, the bad and the ugly. Be with people just like you and join the group Passionate Property Investors on Facebook now. Become part of a community who know what to do and when to do it. And the time to do it is now. Passionate Property Investors. Tribe, tools and tips. Find us on Facebook today.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone, how are you going? Thanks for joining us on the podcast today. Here we are smack bang in the middle of the summer break, and for some people that might mean a couple of days off. It could just mean the holidays off. For other people it could be a whole month off, taking it easy, thinking about getting back to work at the end of January. Normally Boxing Day is the time that triggers a return to the grind. I hope you're enjoying whatever you're doing. Thanks for spending time with me on the Smart Property Investment team, talking about property. And it's interesting because, part of my job here is to, set the editorial direction of the coverage and the commentary that we focus on. And, we get it right most of the time, sometimes not so. And, it means I've got to keep my finger on the pulse and knowing what's going on. I do get a little bit of criticism sometimes for not concentrating on particular things. And if I'm doing that, please let me know, because I'm very responsive to feedback. Editor at smartpropertyinvestment.com.au. If you want us to do anything in particular, you let us know and we'll get onto it. I'll find someone that can come in and do that for us. One of the things I've been copping a little bit of flack about is being a bit Sydney and Brisbane centric recently. And I take the point. I would respond to that by saying these are markets movement right now, and we'll keep focusing on those areas we feel as though investors that has the greatest potential of investment properties being bought and sold, and where there's potential opportunities. But that doesn't say that they're the best markets in Australia. There is markets within markets within markets all across this great nation. One of them is in Melbourne, and I'm conscious that we need to do a real deep dive into Melbourne at a point in time. So watch this space, we'll do that. But somewhere where we're getting a lot of other information, a lot of noise, a lot of questions, and the need for insights is around Perth, which has been pretty quiet of late. And we touch on it regularly, but not in a deep dive. So I thought today we'd use this opportunity to have a chat about the Perth market, whether there's any opportunities there, what you should be looking for or looking at, and what the best investors are doing in Perth. As you know, I'm not an expert by any means. I'm just a journalist trying to get by and ask a few good questions. So my job is to try and get decent people into the studio, which we do most of the time, but then there's those which are less decent. That's Paul Glossop. He's joining me back in the studio by popular demand. Sorry, mate, I couldn't help myself. Director of Pure Property Investment.
5 minutes framing that up.
That was really funny, though. Is that I had no idea where I was going to go with it. And then the opportunity just arrived.
Bam.
And I went, this is the way I'll play.
You need to have an infomercial, like a little light bulb that comes next to your head. That'd be a good one for the actual holding picture for this podcast.
It's a great way to set it up, but and I do that, as you know, in jest, because it means as though I probably think you know what you're doing. So how you been? You well?
Yeah, very well, mate. Very well. It's funny you bring up Perth, and I know we only talked about this only a couple of minutes before going on air now, but it's definitely one of those markets which has definitely pivoted very recently and now being backed up by some pretty critical data that not only says that what it should be doing, but it is what it actually is doing, which is very interesting.
Well, thanks for taking the time out of your break to come and have a chat with me. It's important that we keep things current and live during this period where traffic goes through the roof for us over the Christmas period or this holiday period. So we need to make sure that the information we're delivering is right on the money. So we're talking about here and now, Perth. What's going on over there? Because everyone seems to be talking about it again.
Yeah, it's funny, isn't it? It goes about turn very, very quickly. And I kind of liken it probably to a market, maybe not as sleepy as where Hobart was 3 or 4 years ago. And, we did really, really well out of Hobart, probably at a time where we managed to be able to get in there before anyone else was sniffing around and got a lot of good outcomes. But Perth's been a market that is obviously much larger. It's our 4th biggest city, pretty close to our 3rd biggest city, and only 2 years ago was touted to become the 3rd biggest city by a long way, and was going to go through an exponential change as far as population growth. Now, I guess what has happened over the last 5 years is that the market topped out around about 2014. Since then, we've probably seen peak to trough numbers go from 2014 to around about mid-2019, dropped by at least 30%, in some cases a lot more in Perth itself. Obviously only referring to Perth here, there's a lot of the supporting markets and the larger mining markets which did far, far worse. But in that time, we also saw rental yields go from dizzying heights of 5-6% at their peaks, down to 3.5%, and vacancy rates in excess in the residential sector in excess of 6% at their absolute doldrums, which is 2017, 2018. So it's gone from amazing growth and tripling in price from 2000 to 2014 to then losing at least 30% of that number, as well as losing a lot of cash flow in that same space, which is only just starting to turn a corner now.
So the read on this is that if you bought property in 2004 and sold it at the peak of the market, you probably would have done okay.
You would have done very well.
If you held onto it, you're back to where you started. So that's locking up your money for 16 years without anything.
Yep.
The yield's coming down, so it's probably costing you to hold it. So if you've invested in Perth and if you haven't transacted in and out of Perth at the right time, you're probably hurting a bit.
Yep. Yeah, agreed.
Fair?
Yeah, absolutely fair. And it's not to say that it's a unique market, because you pretty much look at any market across the country and you've probably got some pretty similar parallels that are running. Sydney and Melbourne are probably, and Brisbane to a degree, probably a little bit more benign or immune to that. But the markets such as Perth, who have been more reliant on certain things to drive their economy in the past, have probably suffered a lot more in the last 3 or 4 years.
So I don't want to go back over all the reasons why Perth is in the state it is in, but for our listeners who aren't that familiar with it, what happened in Perth? What do the wheels come off in terms of property? Great place to live.
Love it.
I think Perth's great. It's a long way away. But
it is a long way away.
It's a great place to live.
Closer to Asia than it is to Sydney.
So we're talking about what the wheels come off the property investment market.
Yeah, look, if I look at the major things that came off, there's always going to be nuances that affect every market if you look at a lot deeper in the intricacies. But a few things that happened on the lead up. So they saw the peak of their construction probably between 2014 and 2015, maybe a touch of the early 2016.
Are you talking about mining construction, which
no, I'm talking about supply. So talking about residential construction in Perth itself. Yep. And in that time, to your point, is that was where, sort of probably from around about 2013 onwards, is where we start to see the downward cycle of the resources sector. And that went on for 2.5, 3 years. And we probably remember the Rudd Gillard government Rudd government go through a fair bit of rhetoric at the time saying we can't keep relying on this. And that was kind of at the time where they knew that the writing was on the wall. And that's where the bottom end fell out of their tax receipts, their royalties, and ultimately their jobs and population growth and demand. So what they saw is they saw this huge lead up of demand for 10, 15 years, mass amounts of money being pumped into it. It was only 2009 that Perth was the most expensive city in Australia. And I think medium price, comparing it to every city in this country, it was the most expensive. And right now we're talking about a median price in the mid 400s, where literally just over 10 years ago, it was the most expensive city in the country. Now it's half the price of Sydney if you look at median price on freestanding houses. So going back to that, they saw a lead up of supply. At the same time, they saw a massive fallout of population growth, of their economic position, where they went from the number one state in the country to then basically being the seventh or eighth state in the country, based on jobs creation, based on population growth, based on vacancy rates, based on unemployment data, etc. And that happened at exactly the same time. So they saw an exodus of around about 15 to 20,000 people per year for 3 or 4 years following 2014. At the same time, they saw supply at its absolute peak. And that went from vacancy rates sub 1% for the best part of 5 years to vacancy rates skyrocketing to 6% within a 2-year period. And all of a sudden, more supply coming in at the same time because they had approvals 2 years prior, people not coming in there, far less demand, far less tax receipts, high unemployment, which more or less led them from a peak of 2014 to a trough of around about mid-2019, and probably now seeing prices where they're very attractive again and starting to see rental growth absolutely. When I say absolutely no supply, but in the freestanding housing market, very limited supply in that market that's come there now, which puts it in a much stronger position, both on a supply-demand ratio, but also where their economy is now heading again, which is probably the early stages of where their recovery is starting.
Okay, when we come back, we'll have a look at what this recovery is. And remiss of me not to mention, if you're not familiar with Paul and his business, Pure Property Investment, it's buyer's advocacy, buyer's agent. What do you call yourself?
Whatever you'd like to call me.
Property strategist?
Yeah, look, we're a buyer's agency.
Yeah, buyer's agency.
Yeah, we can call ourselves a lot of things, but we're a buyer's agent.
Okay, and just you're currently operating in Perth now? Are you
Absolutely. That's one of the markets we are buying.
All right, we'll get in that in a moment. Back in a second.
Creating financial freedom is every investor's dream. Best-selling author and director of Pure Property Investment, Paul Glossop, is giving you that chance. To grab a copy of his new book, A Surfer's Guide to Property Investing, absolutely free, simply jump onto Pure Property Investment's Facebook page, hit the message button and type the words Smart Property to secure your free copy today. But hurry, this offer is limited to the first 100 people.
Welcome back, everyone. Here with Paul Glossop, Director of Pure Property Investment, a buyer's agency. We're having a chat about the Perth market and, just reflecting on what happened in Perth. And for a lot of people, it's a bit of one of these mysteries and they don't really understand it. So go and check out smartpropertyinvestment.com.au. We must have written literally hundreds of articles around Perth and the dynamics and some of these economic drivers, both macro and micro, which has influenced and shaped that property market to where it is today. So, Paul, where is the property market today? Is it going to start going north or is it going to go sideways?
Yeah, look, I think if anything, we're probably at the point where it's going to start to trickle north from this point onwards. We just saw data drop from November, CoreLogic data, which showed that it was the first month of growth for Perth for a very long time in capital gains perspective. The quarter 3 of 2019 was the strongest rental growth market was Perth at over 5%. So if you look at a couple of those, probably more so previous indicators which show where it's come from and where it is now, we're all of a sudden seeing that some of those key things as far as rental growth and then that leading into capital growth, which I don't expect it to go a huge hockey stick, but we are in a position now where rents are getting very, very attractive. Vacancy rates are getting lower by the day. They're sub 2.5% and getting better by the day in most markets now. And then also on top of that, we've got some big infrastructure projects along some of both the transport infrastructure as well as healthcare, as well as some of their major square developments, etc., and closer to the CBD, which are now leading towards jobs creation, unemployment dropping. So that's probably the part where we're seeing it's probably recovery time now, but really good early stages of it.
Talk me through the competitive environment in Perth working with real estate agents. Are they still got their sort of pants down and just wanting anyone to come and buy, or are you starting to see positive pressure put on the negotiation? Is there other buyers agents out there? Is there other investors out there? Is everyone sort of scrambling now to get into Perth, or is it still reasonably green fields for people who are buying?
It's the most bizarre market I've worked in as a buyer's agent, as well as my team as buyer's agents, to be completely transparent. And that's working in the peak of Sydney markets to Hobart at its doldrums, and then going berserk to Brisbane to Melbourne to a whole bunch of other markets in between. And the reason being is that you're absolutely right, that sales agents have fallen off the wayside. You've probably got half of the sales agents that exist in that market that existed 5-6 years ago at their peak. So they're desperate to get both, not necessarily listings, but sales. So they want people to come and pay what someone's prepared to take for the property. The challenge with that, though, is that, and I can give you an example of a property that we've got under contract right now for $323,000 that sold in 2014 for a touch over $480,000. This is the challenge that the sales agents have, is that they're happy to take anything that we're prepared to pay. The drama that they have then is, how do they go to their vendor who knows that they're about to take a $100,000, $150,000 haircut in a market that's just starting to show recovery? Because all of a sudden now they're seeing headlines that say Perth in a market recovery, etc. So they're saying, well, should I sell? Can I hold on? So there's this.
So stock's going to come down. Like, there must be a lot less listings, right?
There is, and people think if a market's on its knees that you've got supply coming out its ears. Well, it's not necessarily the case for Perth. Perth doesn't have a huge amount of property per resident, or as far as total percentage of stock listed. It's not necessarily a market that's flooded with supply. It's still a tightly supplied market, but it's probably partly because people aren't prepared to take too much of a haircut in a market that's now going through or just early stages of recovery. So negotiations are tough because you're trying to figure out how to buy a property at a price which you know is going to be the right price and the right conditions, the right location. But then the agent is coming to you saying, yeah, they'll take it. And all of a sudden they're working the background, only to be told a week later saying, sorry, they're just going to pull it from the market. And I can count probably in the last month at least a dozen properties which we were in a position that we had it secured, client wanting to purchase, and everything was agreed upon, to them only pull out at the last minute because they got cold feet and they're looking at headlines now, which no doubt will come from this podcast in some way, shape or form, that people think
the fact that we're talking about Perth means that Perth's going to explode.
And I do take that.
You can write to me, Mr. Mayor, or the Premier out there, and thank me for it. But this is an important question. How do you determine value in the Perth market?
And that is a very difficult proposition, because if you look at saying, well, what did we buy? What is this property worth 5 years ago? I can guarantee you that we'll find properties every day of the week that show extremely good value based on that. But then you've got to look at, well, it always comes down for us, what are we looking at that sold within the last 3 to 6 months? And when a market starts to recover, you're not necessarily looking at just the last 3 to 6 months. You're kind of looking at what was this property worth in its peak. But in addition to that, the attached markets we're just not touching. So anything in the apartments, townhouses, etc., there is more supply coming to that market, probably unnecessarily in Perth. And it's the only market, major city in the country right now, which still has actual positive signs as far as approvals. So In the detached market, we're looking at properties which have what they deem to be anywhere between R20, R40, R20, R60, R20, R80 zoning, which from any other state's kind of the equivalent of medium density or potentially in some cases high density zoning. So looking at properties which can be subdivided or turned into 2 lots or 3 lots or townhouse zoning or unit block zoning. So that's probably where we're looking at not only what are we paying, what's the comparables, but what is this land going to be worth? And we do a lot of work to understand what the intrinsic land value is and making sure it's probably above 60% of total purchase price.
So why would you buy in Perth versus Melbourne or versus Sydney? And I consider my own paradigm around that, and you should be a borderless investor, and we chat about this all the time. I think of Perth and I go, it's a long, long way away.
Yep.
It's the worst flight in the world because I hate coming back from Perth. So I've got like a negative perception around it because of that particular reason, which is being a bad investor, right?
Yeah.
And we'll chat about that in a moment. But why would you buy in Perth? In what maturity in your portfolio growth, portfolio development, or your property journey do you need to be buying in Perth right now? Why does it make sense?
Yeah, look, I still probably temper anyone who's considering an investment right now to say that we don't expect it to be a 2 or 3 year, 20% growth, exclamation point, and just say that was a really, really amazing outcome. The things that we look at Perth is that we're probably saying that it's probably a property or a market for someone who's got at least 1 or 2 properties on the East Coast in certain markets at certain times that are going to fit their longer term objectives. The good thing about Perth, though, is that you've got median prices that we're buying in probably within that 300 to 500 range, which are still attracting 4 to 5% gross returns with higher density zoning in a rapidly improving rental environment as well. So cash flow is going to improve, and we're probably buying with a much lesser downside risk than a long-term upside risk. So for me, it's still for an investor who's happy to look at it as a 5, 7, 10-year play as a bare minimum, which is, to be fair, no different to most markets. But if we look at that compared to Sydney and Melbourne, they'll probably see, and data will show that they've probably seen 10% growth in the last 6 months. So if you're looking at that to say, I'm going to get that, you're not going to get that. But it's also to say that Sydney and Melbourne at the same hand, you say, well, yeah, they might grow double digit for the next 18, 24 months. Cash flow is 3.5%. But what happens the 5 to 7 years preceding that double-digit growth in Sydney and Melbourne, where we look at you're buying at 10 times household income, you're buying in a market which has got 3+% vacancy rates, you're buying in a market that's got bugger all as far as cash flow is concerned, and you're probably buying at a time in the cycle where it's still really, really expensive. For me, that 10-year play is really what we're buying for.
And you see, you've got to get this right, and as an investor, you should be considering all the opportunities. And I want to know what the best investors are doing in Perth. Tackle that after this break. Back in a moment.
We get it. You're here listening to the Smart Property Investment Show, and you're being interrupted by this ad. We value your ears just as much as your eyeballs, so we'll be quick. Join passionate property investors on Facebook today, and we'll fill your Facebook feed with useful tips and tools, plus free education from industry experts and a tribe of people who get it. Passionate property investors. Find us on Facebook now.
G'day everyone, we're back here with Paul Glossop, Director of Pure Property Investment. We're chatting all things Perth. Now we've gone through a lot of the numbers, Paul, some of the dynamics, and before the break you mentioned that it's got to fit within a portfolio, so it's got to be a considered approach to move into the Perth market as a property investor. Now, what are you seeing the best investors are doing in Perth right now? You said the sort of stuff that you're buying and the stuff that's attractive to you, but how are they making sure they can get the absolute best out of Perth? And an extension to that, where in Perth do you buy? Because I know you buyers agents don't like telling us anything what you're doing, so I want something tangible.
Mate, I'll give you everything. There's no secrets in our place.
And I've got James here, and our producer. You can tell us some numbers as well if you've got any little hotspots, I say with a wink.
For sure. Look, I think one thing we're always looking at is not just probably markets, but it always comes down to what's the budget we're working within and what are we trying to achieve out of that purchase. Because Perth's a market that you've still got exponential, very, very expensive markets towards the river, towards the beaches on Cottesloe and the surrounds.
Well, the most expensive street in Australia is still in Perth, right?
Yeah,
I can't remember the name of it.
I think it's in Peppermint Grove. I think maybe it's along that way. But
pretty fancy.
There is some beautiful areas out there, and obviously quite clearly you've got 2% returns, and depends on what you're after and what your budget is. But if we're looking at where that is, and again, going back down to probably 90% of investors are looking for a 10-year plus play with something that might have an X factor, that does have good cash flow, but is in a position that allows you to potentially manufacture something out of it. Some of the big infrastructure plays, we've got Perth Airport Extension, and with that you've got the Forestfield Metronet, which is at its peak, it's probably going to be 5 to 6 year construction period that's taking people from the airport or the airport surrounds to Forestfield Terminal train station, which is then going to have a direct train line straight to the CBD. And they're looking at that being an express train straight to the CBD on
from Forestfield.
Forestfield.
Okay, look that up there, James. CBD.
How do we spell that, Paul?
Forestfield.
Probably doesn't even appear.
Doesn't.
Well, it's Forestfield. But this, I got to admit, my geography knowledge of Perth is pretty poor. And I'm working on it. So this allows me to do it. Did you find it?
Yeah, I got Forestfield here.
WA.
Yeah, Forestfield, WA, 6058's the postcode.
Yeah, what do you got?
We've just got house
giving all the digits now.
Median house price is at 367,000. That's had a negative 2.13% quarterly growth. Over 12 months, it's seen negative 12.1%. Over 3 years, negative 13.39%. Over 5 years, it's seen a negative 19.34%, with a 10-year average annual growth of 0.81% and a gross rental yield of 5.03%.
So it hasn't grown in 10 years.
Pretty much. But if you split that 10 years, if you split that 10 years, the first 5 years, you will have seen that the work up.
And then you saw the negatives.
And then you saw the negatives. So you've got a game of two halves where you've got the first 5 years, you would have seen ramp up of probably 30% growth, back end
come back
pretty close to that same amount.
So that's representative of Perth.
Exactly what what we were talking about 5 minutes ago. So that's representative of a lot of markets in Perth. And you see there that yield in that market, you're not just buying properties there that I think, so the big thing and change is not just with that market, there's probably 6 or 7 different markets along that new MetroNet extension where you're going to see rezoning and more propensity for the local government to want to see higher density along those corridors because they want to say we want to shuttle people in and out just like any major CBD. And they're looking at this city to be, by 2040, they're looking in excess of 3 million people that they want to see in this city. So it's going to be a big city whether they like it or not. And this is going to be one of those infrastructure projects which will hold them true to saying get people along these train line extensions. And you're only 20 k's from the CBD.
So even though things have been a bit tough, they've still been investing in the future.
Well, this is where the big difference, I think, is for the next 10, 15 years is they're investing not in the short-term stuff. They're investing in the stuff that's going to put them in a better position, both for tourism, both for that airport extension, which they want to get more attraction from the Asian markets, as well as where it comes down to education. And I think that's one thing that Perth's done pretty poorly on in previously, but they're reinvesting. Education. It's our third biggest export. And when they look at it, they've got the lion's share of access from Asia to the Asian students that come in there. They can accommodate straight there. It's a couple of hours away from most Asian countries, or 3 or 4 hours, as opposed to half a day's travel and all logistics that go with that.
Well, Edith Cowan out there. What's the other big uni?
Oh, mate,
I'm trying to think about my university.
Australian
university's games
that's
days.
exactly when I was trying to think back because I remember I did a billet back out there a couple of times over back in the high school days for the university.
Anyway, okay, so the question was what the best investors are doing. So they're looking at these where the intersection between infrastructure and development meets property market dynamics, where you've seen this sort of bounce back over 10 years to equilibrium.
Yeah, absolutely. The reverse bell curve is happening there right now, I think.
So where else? What other suburbs? And we're going to have to wind up. What other suburbs? I might get you to write a piece for us on smartproinvestment.com.au around this, but give another place where it would, this story that you're talking about around this reverse bell curve and this intersection of growth and development.
Yeah, look, I think along the same, that extension probably slightly closer to the CBD, you're going to get areas such as Belmont, Kewdale, Welshpool, as well as down to probably towards Riverdale. If you look at where the MetroNet extension's going, you'll see that there's going to be quite a number of new stations, as well as Cannington East rather. They're markets there which are already probably in a position where they're going through backfill as opposed to on the edges. Probably Forestfield's as far on the edge as we'd go. And then looking a little bit further in, because you're still talking markets which have got access to both airport as well as access to CBD and are going to benefit greatly from that new infrastructure. And the big change that we're seeing right now, and this is probably only the last 6 months, is we're seeing from a mining construction perspective, we're looking at both what's happening in WA, not just Perth right now, is around about 5 billion with a B that's going to be reinvested in new projects over the next 4.5 years in WA alone. And what that's now having a flow-on effect is also the FIFOs of Perth. Now we
fly in, fly out.
The fly in, fly outs for Perth. And we probably think about that on the East Coast, that people would live in Sydney somewhere fancy, or Melbourne somewhere fancy, or Brisbane somewhere fancy, and then go through a whole bunch of issues to get to where they need to get to work as an engineer or mining, someone in the mining sector. But predominantly where the FIFOs for Perth, they're based out of Perth, flying up to the Carathas, Port Hedlands of the world. So proximity to that airport is also a very key draw card for them. And anyone who's driven back in the heyday from Perth Airport to Perth CBD, you would have seen no shortage of Sea-Doos, HSV, all these dealers along that transport route. You would have seen them absolutely booming back in the day, and you notice that they're not necessarily in the city, they're sort of within that 10 to 20k area. So people want to have their conveniences, they also want to be within an area that's going to be safe, decent school catchments, and that's actually just starting again now. So we're seeing that the agents are looking at selling owner-occupiers to these FIFOs who are now starting to get their money back.
So to get a feel for Perth, you drive around to see if there's a new jet ski shop popping up, or
Gumtree's probably a good indicator to see how many are for sale.
how many are for
used,
sale. Because these are
4 years old.
These are the dynamics you need to look at as a property investor, right? Because it's this FIFO work-base. When it's good in mining,
it's really
retail is good, right?
Yeah, absolutely.
And a lot of these miners and related people, they're like buying their utes and their other toys and stuff. It's a really good indicator of what's going on. So go have a look around. We're going to have to wind up, Paul. I think we've done pretty well, but I feel like we've just chipped away at the surface on that.
Yeah,
so
there'll be more to come, I think, the next 12 months.
Let's get you back and have a chat about Perth soon. But let's get you writing some stuff for us, because I want to take a closer look at it personally. I think there might be some opportunities. I reckon, a bit of diversification within our portfolio be well worth having a look at. But thanks for coming in. Thanks for taking time out of your break and away from your family to come and have this discussion. And thanks so much for all your help over 2019 as well. Been pretty involved. And if you like getting Paul on the show and that's what you want to see more of, or if there's anything you want to ask him, I'm happy to get him back in and we can do a Q&A. Editor at smartpropertyinvestment.com.au. Send it there. The team will pick it up and we'll put them all together and do some more Q&As. I'll see you in the new year, no doubt.
Absolutely.
And keep connected, keep engaged. And what's your big goal for 2020 in terms of property?
Big goal for us 2020, or for me personally, I've got a new site that I picked up sort of towards early 2019, back in the absolute dead ball bounce of the market, and we're already got that subdivided and we'll be rolling through that in 2019. And I've got a few properties probably in Brisbane and up and down the East Coast that we're working on, doing some renovations, subdivisions and developments too as well.
Ooh, busy.
Yeah.
Cool. All right. Well, good luck with that. And you come and talk about it at some point as
Absolutely.
well. That'll be good. All right. Nice one. Thanks, mate. Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so the first to know what's happening in property investment right across Australia, smartpropertyinvestment.com.au/subscribe. If you're a social media person, just Smart Property HQ. And please keep those questions coming. We do want to get through them all. And I hope you're enjoying your break over the Chrissy period. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
At Passionate Property Investors, we hear from a lot of infinite learners who love to know more and share more about their property knowledge and investment journey. If this sounds like you and you want to get more education where your eyeballs are, then join us on Facebook at Passionate Property Investors. Videos, ebooks and learning pathways to get your property cup filled up. Not to mention free education with a tribe who gets it. Join today by searching Passionate Property Investors on Facebook.